let's connect with our experts on the show then, and let me also welcome Nagaraj Shetti as well as Aditya Arora on the show right now. And very good afternoon, gentlemen, and thank you so much for your time. Nagaraj, firstly, your take on the stellar move on benchmark indices. Yes, it's a good gain, but the key question remains whether or not we will be able to sustain this.
Hi, good afternoon, Srishti. Yeah, the way it has Nifty has moved up the 300 level is looks like market is sustaining the higher levels. There is a hurdle, immediate hurdle around 24,700 levels. I'm expecting this hurdle is going to be taken out on the upper side, and we could eventually head towards the 25,000 level, which is the next set of resistance for the market in the near term.
All right, that's the take coming in on the markets right now. But yes, along with that, select counters, they have been doing very well. And Aditya, let me come to you for your take on the pharma space, because after a while, we are seeing that sector doing very well, though the street is really looking forward to that kind of a tariff announcement, if at all, when Donald Trump did give almost a week deadline. But yes, the markets are taking a bit easy, at least for today. Cipla, Dr. Reddy's, these are your top movers. What's your take on that? Well, firstly, good afternoon.
Very good afternoon to you and to everyone and all our viewers. Yes, absolutely. Nifty Pharma is taking it easy, and that's quite a swift move on the Nifty Pharma. From the lows of last 3 days, we have seen almost 3 days of gain on Nifty Pharma index from 21,300 to 22,000. I think it's almost a V-shaped recovery over there, and a little more to go because the sentiments are pretty good internationally. Also, pharma related sectors are doing well, and even in India, a lot of heavyweights in Nifty Pharma are doing well. And we have tested the important technical levels of 21,300, and we have respected that support. This is the second time when we have bounced from that level. So I think until and unless 21,300 to 21,450, this range is protected, which is the demand zone for the index. I think we could head a little more higher towards levels like 22,500 to 23,000. So I think the outlook is neutral to bullish on Nifty Pharma Index.
All right, so the outlook stays bullish on the pharma index, and yes, the large caps have started participating in the rally as well. But along with that, one particular segment that is doing very well is actually the new age consumer players like Honasa, Nykaa. They are soaring in trade today, post their Q1 earnings. And my colleague Snehi joins in to help us understand what worked for them and what the brokerages are penciling in now. Snehi, over to you.
Well, absolutely. Two stocks that are up in a way, Nykaa as well as Honasa Consumers on the back of its Q1 earnings. Both of them very good set of numbers coming in. Let's take it one by one. Understand first what worked for both of them individually. Nykaa revenue, EBITDA and margin in line with our estimate. The overall GMV came in at 4,182 crores, which is up 26% year on year, in line with our estimates. What really pushed the stock to do well this time around in Q1 was the BPC revenue. That was up 24%. We were expecting an 18% growth, so beat on that front. Fashion GMV also up 24.5%. We were expecting a 20% growth, so big beat on that front as well. While we're talking about the fashion segment, the fashion net losses have reduced on a year-on-year basis to 27 crores from 30.3 crores last year. So these were all the factors, the top factors among other positives that worked for Nykaa this time around. Let's shift tail and talk about Honasa Consumer revenue in line. PAT EBITDA margin beat versus our estimates. EBITDA margin expansion has been healthy. Focus categories like face wash, shampoo, serums, they've seen double-digit year-on-year growth. There's been 100% year-on-year growth in face cleansers, and this is the third category to reach an ARR of 100 crore plus. The revamp in the general trade strategy, remember that they did last year, has reaped into results. Modern trade and offline retail distribution are both up 20%. Direct distribution strategy is up 50% year on year, and that has driven a 50% increase in retail outlets built in Q1. Now let's come to the guidance front. For Nykaa, they are on track for their fashion EBITDA margin break even in FY26 this financial year itself. They also say that beauty vertical has room for more profitability, and they see opportunity in health and wellness supplements, and hence the acquisition of Nudge Wellness. For Honasa, they expect double-digit value growth for the remainder of FY26, EBITDA to be maintained between 7 and 8%, and they expect larger brands to reach the mid-teen EBITDA margin by 4 to 5 years. Lastly, what the brokerages are making on both of these stocks: for Nykaa, Jefferies maintains a buy, Citi maintains a sell, Axis Capital and Nuvama have all maintained a buy. But barring Nuvama, all of these other brokerages have hiked the target prices as well. As is the case for CLSA, for Honasa, wherein CLSA in fact has upgraded the stock to an accumulate from hold, hiked the target price. Jefferies continues to be positive. Goldman Sachs has maintained neutral. JP Morgan has maintained underweight. But even both of these brokerages have hiked the target prices nominally. So that's the take on the quarter one of both Nykaa as well as Honasa, and what has gone right for both of them this time around.
We would rather play companies where sustainably on a longer term basis, apart from the cyclical second half seasonal uptick, you will see continued sustainable growth in the years ahead. And that usually is these consumer tech companies like some of the ones you mentioned, where they're gaining market share, they're pulling further away from some of the weaker competitors in this slow economic environment. So again, what we are saying is look for category leaders, even within the consumer sector. Look at these consumer tech companies which are category leaders. Some of the names you mentioned, Nykaa, Honasa, etc. They are pulling further away from some of the weaker competitors. But again, the next 1 or 2 quarters are still going to be somewhat tough. Valuations are elevated. So don't expect any dramatic returns from their stocks in the near term. But on a 3 to 5 year basis, if you're willing to wait that long, these are the stocks we would like.
All right, so that's the take coming in from Prateek Gupta, that you have to be really selective within this particular pack as well. But Narendra, a lot of excitement on the stock prices as well. But what do you make out of it? And any of the stocks that is still looking good to you, where one can really look for a fresh addition at these levels?
Yeah, first of all, both those stocks are not under half coverage, but yeah, definitely the results and the guidance has really given thumbs up. The market has really given thumbs up for the stocks. And since the consumer space was not performing well throughout the year, and with just the festive season is starting around the corner, so I think this is much needed respite in terms of the consumption space. And if you see, gradually, the consumer space in these segments are also consolidating, although on a very slow pace. But we are seeing consolidation into the large players, and the unorganized segment is getting out of the competition, and gradually these kind of players would definitely be benefit for the medium to long term. So definitely, it's a place to be in for the long haul.
Narendra, before we let you go, would appreciate your view on some of these defense counters that are doing exceedingly well in today's trading session. Case in point, Bharat Dynamics is up 7%. You have Garden Reach that's up 5%. A couple of other defense names are in focus as well. Give us your sense on where you think these defense valuations are, and do they seem attractive, or are they still quite high compared to some valuation levels that we've seen, let's say, about 6 months or so ago?
See, as far as defense space is concerned, we are positive on the space, and not only for the short to medium term, but even for the long term. If you see the overall demand dynamics in this space, the demand is huge, and the India's import dependency is also very huge. So all these domestic manufacturing companies which are coming up with new technologies and inculcating new manufacturing techniques and offering products to our armed forces, and the increased acceptance by the armed forces on the domestic manufactured goods is steadily rising. So definitely the defense space is going to grow significantly. Now coming to the valuations part, definitely valuations were higher. But if you see the overall growth runway of these stocks, so the growth is continue to remain very high for at least 2 to 3 years, because the requirement defense procurement and the defense requirements are very huge for our armed forces, and all the three armed forces combined requirement is very huge. So ordering activity will continue to pick up over the next few years. So whenever you get a chance to buy in terms of a passive market pessimism, or whenever there is a decline, so it's a good space to be in, and to buy into the installments or something like that. But yeah, definitely for long term, the defense space is very good.
The defense space is very good for the long term. That's the word coming in. Mr. Solanki, thank you so much for taking your time out and joining us here on ET Now this afternoon and helping us with a whole host of fundamental ideas going forward. But let's shift focus then. And Nagaraj, coming to you, your stock specific ideas for trade today.
Yes, I have two specific ideas for the long side. One is Capri Point Laboratories. Chartically, currently trading around 2149, 2150 level. Chartically, if you look at this stock was in a downtrend over the last few months. Recently, we have seen some sustainable surge from the lower levels, formed a higher important bottom levels, and currently placed at the edge of a decisive breakout of the trend line resistance. The overall chart pattern is looking positive. One may look to buy at this point of time around 2150 levels, and the upside target would be around 2300 levels, and one can place a stop loss at 2080. And second one is Policy Bazaar, PB FinTech. Policy Bazaar has been in a consolidation phase. Recently, we have seen some upside breakout of the important resistance, currently showing high volatility at the higher levels, placed at 1850 levels. One can look to buy at this point of time. The upside target would be around 1950. One can place a stop loss at 1800.
Okay, so those are some of the stocks that Nagaraj is liking. Aditya, what about you? Where are you placing your BTSC trades for the day?
I think auto sector is doing pretty well, and we have seen continuous outperformance in auto sector despite the volatility. So I picked up a name from auto sector itself, and the name is Minda Corp. We have seen 3 days of advance in this counter, and I think if one makes a view for about 1 to 2 weeks, then I think the rally could continue. So Minda Corp is a buy at 490, and the stop loss over here is 460. Target should be 525. This is the first one. And the second one is Zydus Life from the pharma pack. We have seen good gains in pharma sector. I think the rally could continue in this space as well. In last few days, Zydus Life has seen good amount of volumes, which is more than many days of average. So I think there's a lot of thrust and momentum in this counter. This is a buy at current market price of 991.40. Stop loss is 950 and the target is 1030 to 1050.